Central Mine Planning and Design Institute Limited, or CMPDIL, is actually a wholly owned subsidiary of Coal India Limited. It specializes in coal and mineral consultancy services, including exploration, mine planning, and environmental management. Now, about its IPO. This is an offer for sale of up to 107.1 million shares, which is a 10% stake. The IPO opens from March 20th to 24th, 2026, with a price band of 163 to 172 rupees per share, and it's set to be listed on March 30th. CMPDIL showed strong growth over the last 3 years, with revenue from operations rising from 1,386 crore in FY23 to 2,103 crore in FY25, which is a 52% increase. Net profit more than doubled, going from 297 crore to 667 crore. EBITDA margins expanded from 27.6% to 40%, driven by operational efficiency and diversified revenue, while dependency on the Coal India Group fell from 83% to 67% of revenue. EPS improved from 4.2 to 9.3, reflecting sustained profitability in a growing mining consultancy sector that's projected to reach 4,007 crore by FY30. Brokerage analysis project FY27 EPS growth of around 13%, supported by sector expansion, reduced parent dependency, and demand for mine digitalization and environmental services. Revenue growth is expected to continue, backed by CMPDIL's 61% market share in India's coal and mineral consultancy, as well as R&D innovations like 5G mining technology. So, talking about strengths, CMPDIL is a market leader with 61% share, has strong Coal India ties, advanced infrastructure with the largest drilling fleet, and R&D recognition. As for weaknesses, there's client concentration, with 67% of revenue from the Coal India Group, and some legal proceedings with a potential liability of 192 crore. On the opportunity side, there's mining sector growth, green energy transitions, and policy advisory for coal bed methane and renewables. But threats include regulatory changes in environmental or land laws and competition in diversified minerals. CMPDIL's Moat really comes from its near monopoly in coal planning, solid government backing, and some pretty unique proprietary tech, like its specialized labs for coal bed methane and geophysics. Plus, it actually plays a big role in helping the Ministry of Coal execute policy. The company's got, a pretty balanced business mix too, with about 46% in exploration and 21% in planning. And with over 400 R&D projects, innovation is kind of built into the DNA here, which means there are really high entry barriers for any competitors. On top of all that, CMPDIL has no borrowings, which just gives it more financial flexibility. Promoter Coal India Limited, which owned 100% before the IPO, is actually India's largest coal producer, producing 781 million tons in fiscal year 25. It's a reliable public sector unit with strong government support through the Ministry of Coal. After the IPO, Coal India Limited will still keep the majority stake. There isn't any direct equity from the president or the ministry, but there's a strong strategic alignment that really boosts credibility, especially with all the ongoing PSU reforms. The current grey market premium is 19 rupees, which is about an 11% premium over the upper band of 172 rupees. That kind of implies a listing around 191 rupees. So, about an 11% gain, though some reports are saying it could go as high as 14%. For one retail lot, which is 80 shares with a minimum investment of roughly 13,760 rupees, the potential listing profit would be about 1,520 rupees if it lists at 191. But of course, GMP is unofficial, and honestly, it can be pretty volatile. Long-term returns will really depend on how well the company executes, especially with current PSU valuations. If you look at recent peers like BCCL, they've listed pretty positively. Bookrunners IDBI Capital Markets and Securities and SBI Capital Markets are managing this issue, which signals some strong backing. Analysts are pointing out the company's growth potential, things like the uptrend in revenue and EBITDA, plus sector tailwinds. And they're recommending subscribing for listing gains, though they do mention some client risks. YouTube experts are predicting a listing price anywhere from 210 to 250 rupees, with all the hype around this IPO. So, if you're a finance-savvy investor who focuses on commodities or PSUs, you might want to consider this for a short-term flip if the GMP holds, or even for the long-term based on its moat. Just, allocate based on your own risk tolerance.